Consecutive subdued sessions, they ended in green today.
Yes, Shweta. So after about a 0.8% loss last week, the Indian markets kicked off this week with a positive note. At close, Sensex was up about 367 points to close at 66,527 mark. The 30-share index touched an intraday high of 66,598 levels and an intraday low of 66,998. Now Nifty on the other hand ended 0.55% higher at 19,753 levels. It touched an intraday high of 19,772 and an intraday low of 19,597. Now the broader market, Shweta, outperformed benchmarks. They were up about 1%. Both Nifty small cap 100 index and the Nifty mid cap 100 index gained about 0.97% in today's session. Among sectoral indices, Shweta, apart from Nifty FMCG, all sectoral indices ended in the positive today. Now capital goods, oil and power, auto, metal were up 1 to 2%, whereas FMCG was down 0.5%. Now as you can see on the screen, NTPC was the top gainer in today's session. It was up
the gainers have disappeared. Let's get the gainers back. Here we are. Okay.
NTPC was up about 3.93% as its earnings were due today. The results are not out yet. ONGC was another one which was up about 3%. Adani Ports was up 3%. Power Grid Corporation was up about 2.79%, and Tech Mahindra, after closing lower for last week, was up 2.33%. Now among
Suyash, sorry if I can interrupt you. NTPC results haven't come out yet. So what is the action that we are seeing on the stock here?
Though at least from what the street is saying, NTPC is expected to report a robust set of numbers. So I think that's why the market is kind of taking that into account, and the stock gained about 4%.
So is it fair to assume people have bought hoping that after the results tomorrow the stock is going to open higher and then they could sell and make a killing?
We could see definitely some profit booking in tomorrow's session. NTPC although has been one of the major gainers in the last 2 or 3 sessions. So NTPC stock, at least the expectation of the street is that the NTPC is expected to report a robust set of numbers. Karthik.
I think a bit skeptical about Tech Mahindra. What exactly happened there? The stock had been tanking for a while after the lower than expected results, tepid results. The stock is up.
The stock is up. As I just mentioned, Shweta, Tech Mahindra had been under pressure as most of the IT stocks at least have had a subdued set of numbers. At least they reported they missed guidance. So Tech Mahindra was also under pressure, but Tech Mahindra's results were not as bad as the street expected. So after the entire last week of ending in the negative territory, Tech Mahindra and other IT stocks, as a matter of fact, were in the positive today. The rally was mostly broad-based. Apart from FMCG, all the sectors did really well today.
All right. And what were the top losers?
So among the top losers was Apollo Hospitals, which was down 3.03%.
Let's move that graphic to top losers now. Yes.
Apollo Hospitals, which was down 3.23%. Britannia, as we saw the weakness in the FMCG after the results of Marico came out over the weekend. Britannia is down 2.24%. HDFC Life Insurance is down about 1.7%. DV's Lab is down 1.5%, and Kotak Mahindra is down 1%.
All right. Any big triggers that you were tracking this afternoon?
Any big triggers? I mean, this action has rather been stock specific. The domestic, the global cues are positive, and that's what we have seen. The Indian markets are tracking the positive closing of the US markets and the European markets, although Asian markets have largely been subdued over the last week or so.
All right. I'm not sure if our guest Kranti Patel has joined us, but some of the big results that we are tracking this afternoon is that of Maruti. What is the expectation? Could you run us through what the street is estimating Maruti to clock?
So Shweta, Maruti is expected to report a double digit, at least the profit is expected to double over the in this quarter to about 2490 crores from 1012 crores. So 145% rise we can expect. Now the revenue is expected to jump about 18.6% from 26,499 crore to 31,430 crore. Margin is expected to pick up by 280 basis points from 7.2% in Q1 FY23 to 10% now. Now we have seen price hikes in Maruti, so the margin is expected to grow up. That's why we are seeing a 280 basis point expectation of the street. and also the raw material prices have come down, so that will help Maruti Suzuki post a good margin beat in this quarter.
So Shweta, if you remember, I think last quarter we had Shashank Srivastav join us on the day of results, and let's hope to get him today as well once the results are out. And I think what I recall from that conversation was the fact that he said that the auto companies are not profiteering from the supply chain crisis. But if you look at the numbers, that seems to be the case. When you've got the revenue jump only year on year, jump only about 18.6% or so, look at the expected rise in net profit, 145% growth. So Suyash is saying that the raw material cost has possibly come down now that the supply chain issues seem to be a little more on track. But that sort of advantage has not been passed on to consumers like us, which means that they had jacked up their prices when the supply chain crisis was on, when we were facing an acute shortage of semiconductors, and they increased their prices, did not make as much in margins then, but now with the prices coming down, that advantage is not accruing to us.
Is not being passed on to consumers. Kranti Bhatini joining us at this point in time. Kranti, appreciate you taking time out. I want to understand, do you agree with what Karthik is saying here? Is this the case with other auto companies as well? It looks like they're jacking up the prices, supply chain is back on track, and they continue to profiteer due to these reasons. They're not passing the benefits.
Absolutely. Yeah, I absolutely agree because the time has come for them, because any auto dealer you contact and ask for any new selling brand, the waiting period is humongous. You need to wait for minimum more than 3 to 4 months time. That's what the on-ground street reality. So the price appreciations what they have taken have really increased their margins. And also one thing with respect to Maruti is concerned, 3 years back, if we interact with the management of Maruti, they always used to focus on entry-level segment. Now their primary focus is with respect to the SUVs and high-end brands and the brands which are above between the bracket of around 10 to 15 lakhs range. This is the focus area right now. And earlier, the product propositions what they used to offer is mainly focused on entry-level brands. And when we ask about electric vehicles, they used to give they were not giving any commentary, because for them it is a premature kind of story for them. And also if you ask for high-end product segments like any sunroofs and all, they were tight-lipped. Right now the entire scenario is changing. They are completely changing on high-end products and launching a new SUV range and trying to offer a high margin business segments they're offering. So what we can see with respect to Maruti, cars are pursued as prosperity symbols across the globe. So right now, there is a complete shift in their product mix right now. That's what we are witnessing after watching the Maruti numbers. So currently the company focus has completely changed from an entry-level car to a mid-range and SUV range. It shows the strength of the Indian middle class and rising Indian demography right now.
What are you really watching out for? Do you think there is any possibility of prices really coming down now that the supply chain issues and raw material prices are under control? Or are customers continuing to pay? I mean, it's good for stock markets if the net margins are good, but not very good for those who are not directly invested in stock markets, but indirectly by buying the Maruti cars.
Absolutely. We don't expect any significant price reductions going ahead. They're going to maintain the same kind of tempo going ahead also next few quarters. I don't expect any price reduction. Rather than many of the products, because of the waiting period they have, every dealer is trying to take the premium charge right now. I don't expect any price reduction at this point of time.
How are the markets reacting, Kranti, to the fact that Maruti has been a late entrant, in fact not even an entrant yet in the electric vehicle segment? I know you briefly touched upon it, but EVs is something that we have been waiting from the Maruti stable to come, but to no avail yet. So how is the market going to react to that?
Yeah, Tata Motors and other OEMs have been fast in introducing the new models. Always Maruti is slightly late entrant in a high-end products and new experiments. So we need to wait and watch how the company is going to be. We have not received any kind of guidance with respect to electric vehicles. Probably it might be in an experimental stage right now. We need to wait further to get any clarity from the management to get a full-fledged electric vehicle from Maruti brand. But
All right
now,
Kranti, sorry to interrupt you, but Maruti's results are out just about 5 minutes ago. Let's quickly run through the numbers. Automakers' net profit for the quarter ending June surged twofold year on year to 2,485 crore rupees.
Just slightly 5 crore short of the estimate.
Estimates, but some estimates, I mean, estimates are different for different organizations. So beating some estimates, more in line, let's say, with estimates there.
Yeah.
The revenue from operations rose 22%.
Ooh.
On year to 32,327 crore. It's higher than what many other competitors expected at approximately 31,000. Analysts expected 31,700 crores. So that, of course, are the numbers that we are reading at this point in time. How are numbers looking out?
In line with what was expected, Kranti. I think only better, not just in line, but only better. So what kind of movement do you expect on the market, on the shares tomorrow?
Absolutely. The numbers are in line with the expectation. They have posted better than expected numbers. With my calculations, around 2,480 was we were expecting. They're just way above from our expectation. The stock is going to respond positively. But one thing is the current the stock is with respect to the forward earnings of FY24 is concerned. The stock is currently trading at 26 times forward earnings. So if the same kind of momentum with Maruti is going to continue, we can see some kind of re-rating with respect to the Maruti. But right now the game is what kind of products they are going to launch. Whether the market leader in the entry-level cost segment can be remained a market leader in the SUV segment, high-end products going ahead, and how the product innovation. This is going to be the crucial thing for Maruti going ahead to continue the same kind of robust earnings. That's what crucial for Maruti going ahead.
All right. Among other companies whose earnings we are tracking this afternoon is Adani Transmission, NOICL, GAIL, Navin Fluorine. Let's quickly understand how the numbers have been this afternoon. How have these companies reported? What are their numbers looking like?
So Shweta, Adani Transmission has reported a robust set of numbers. Now the net profit, although was down about 6%, revenue jumped about 17%, and margin, now get this, 215 basis point hike we saw, and EBITDA went up 133%. So all in all, a good set of numbers coming in from Adani Transmission. And now talking about Adani Green, another company from the Adani stable that has come out with its results today. It reported a 51% year-on-year jump in net profit to 323 crore from 213 crore. Revenue, Shweta, went up 33% from 1,635 crore to 2,176 crore. Meanwhile, EBITDA, earnings before interest, tax and depreciation and amortization, was up almost 120 basis points, and margin, Shweta, was up 376 basis points. That's a huge jump on margin.
You know, all the green arrows pointing upward. Overall, the Adani story, Adani's market capitalization at this point in time is better than what it was prior to Hindenburg report. So it has sort of allayed fears across all the listed companies, across all companies that it currently has a majority stake in. All of them are profitable. The share prices are up again. All in all, I think the fears of Hindenburg sort of they've been put to rest, at least by investors and at least by the sentiment on the Lal Street.
So I think there's a broader discussion here, and if Kranti is with us, we could possibly take it back to him. Kranti, so do you think earlier, I think, 10 years ago or even more recent than that, the common belief was that markets work on sentiments. But from what we are seeing in the case of Adani, it seems that markets now function clearly on numbers. Sentiments aside, it doesn't matter what the sentiment is. I think you're looking purely at the financial numbers and nothing else.
Absolutely. In the medium term, sentiment plays in a shorter to medium term. Sentiment plays a role, but on a longer term, purely numbers, earnings, it matters a lot. Always stock markets are slave to earnings. If the numbers are good and if the company have a good proposition with respect to their corporate governance, market always respect those kind of companies. With respect to Adani's, of course, they have taken a lot of measures with respect to the damage control. They could able to reduce their debt significantly in the past, post the Hindenburg saga that happened. So all eyes are what will be the outcome from the Supreme Court judgment that's due in the month of around middle of August. That's where all eyes are on currently.
All right, Kranti, appreciate you taking time out this afternoon as usual. Good to have you on the show. We will keep coming back to you, of course, with more results. And
I can see Suyash is tapping away on his phone. He's unable to get his mind off the Maruti numbers that have just come.
Right.
Suyash, why don't you carry on and work on the Maruti story, and we'll catch you again tomorrow maybe.
For sure.
Thanks.
Suyash, thank you very much for joining with your inputs. We're going to move on now. Every time we hear of an economic rebound and macros looking good, one question that everybody asks is, but where are the jobs? Now, the macroeconomic uncertainty is impacting hiring across the board. The Indian IT sector and services industry's campus placement has been deeply affected and impacted. Many institutions are complaining that these companies that you would come to campuses to hire students are visiting but not making any hiring commitment. In fact, a news report also states that hiring could be down, at least in IT sector, by as much as 40%. Not just that, job cuts also continue unabated. Nearly 70 startups laid off 17,000 employees in the first half of 2023 alone. Those are big numbers. Numbers, of course, we continue to track. But more so, what exactly is driving hiring sentiment? To talk about that is joining on the show at this point in time is joining Prabir Jha, who's a HR strategist and also an advisor in many companies. Prabir, thanks very much for taking time out. I think my first question to you would be, is this specific to IT sector or are we seeing job cuts across the board?
Hi, Shweta. Thank you for having me on your show. And I think the answer is in your question. I think it is more reflective of what's happening in the tech space. Part of it mirrored by the changes and the recessionary mood in the consumer markets, the Western world, and that is what is clearly coming out in play. Startups, there's been continued extension of the funding winter. You know, it's getting a little more drawn. But having said that, and I was listening to some of the quarterly results that you were talking about, I personally believe the sentiment is overall going to be good. But, you know, when technology, hiccups, the media also makes a big story out of it. So you're very right. On campuses, a lot of the big daddies from the tech space who would hire, they've dramatically cut down their offer numbers. I think in some ways, this is what I call hiring correction. You know, the quality, the nuance of hiring is going to be a little different. But I do not think that the outlook is by any means pessimistic. I don't think that's necessarily true.
Okay. Well, it's interesting. You're saying the outlook is not pessimistic despite the fact that students who are currently in the campus, perhaps in their last year, are looking at a bleak future. How do you explain it?
You know, it's all with reference to what they've heard and seen over the last year, 2 years, 3 years, right? And you get taken away by the euphoria of placements and day zeros and day -1, and everyone gets a job, earlier, and you've got the big tech consulting firms who come in and hire 50 people from a batch. Now, that's obviously not happening, right? And for many people who had possibly designed or thought that they would possibly build careers in this space, for them, it's a bit of a hiccup. But does it mean that there are not going to be enough job offers or other companies are not going to come to campus? I don't think that's true. I think it's an opportunity for many, many companies to up their hiring, the quality of hiring. But it's a mismatch between what students and the dreams they came with to campus and unfortunately the downturn that we see in the technology space.
All right. I think my question to you in this case would be specifically with respect to startups, since we continue to track the startup growth trajectory, or rather the degrowth that we are looking at. Less number of unicorns, less number of unicorns. A big story that we continue to track also in terms of devaluation. Are we looking at startups not doing too well? I mean, what is your outlook if you look at the performances of startups? Because here on Newsline, we have tracked growth story of Baiju, which is one of the most valued startup in India, as many would say, maybe not so much anymore. Dunzo, whose future is looking bleak. All these startups that, you know, started on a very promising note, not seem to be doing too well at this point in time.
So it's a pity, and some of it is, I'll be honest, the doing of these startup management styles and practices. I mean, they themselves have to be blamed. Second is many startups, I think, grew too fast without getting their fundamental systems in place. So some of the so-called marquee unicorns that we played up and made into big daddies over the last few years, you know, their hiccups have definitely muted the sentiment, not only about startups, but also hiring for startups. That's the first part. Second part is that a lot of investors that I speak with are getting little more prudent, little more conservative. But it's not to say they are not willing to make the investments. I advise a number of startups, and I can tell you in many of these startups, they are early stage startups, but they continue to be looking for people, and good people at that. So I think, as I mentioned, to me, the seasonality is going to be more about the quality of hiring, the numbers of hiring, and the nuance of sectors. Unfortunately, because we see the big overhang, at least from a media story perspective, which has been a lot to do with startups and a lot to do with technology, you know, there is a lot more of sentiment of gloom and doom. I mean, you just look around, there are many companies in heavy engineering, in hardcore engineering, in consumer durables, who continue to be looking for people and good people. And I know for sure that you know, the hiring or need for quality talent hiring is not abating. I continue to see those kind of reach outs to me as well. So I know that the sentiment is not as bleak. And yeah, there is a bit of a seasonality. And campus hiring, which was volume hiring by tech companies, that's without doubt something which has been, you know, a disappointment this season.
All right, and how long do you think or believe that this disappointment is going to continue? Because here we've been talking about funding winter, Karthik, for a while, as a matter of fact. A funding winter which has lasted for more than some would say 9 months, 1 year.
Almost a year now. Yeah.
Almost a year now. A winter that does not get over.
I know, it reminds you of Game of Thrones, right? Winter
Exactly.
is coming, and hey, winter is here now. Winter is not going anywhere. Winter is staying. Yeah, so I think Prabir definitely has a point, Shweta, and this is something that we've also discussed multiple times over, that that startups were, of course, in this frenzy of raising capital, which they did very successfully, and in this bid to compete within the industry that they operate in, whether you look at fintech, whether you look at health tech, you look at logistics tech, you look at all these food tech, I think these were all anything which had a suffix of tech saw enormous hiring, and that obviously swells up the P&L account. Now, in the absence of fresh funding coming and not a proven business model which is generating sustainable cash month after month, quarter after quarter, obviously the pressure on the P&L is so high that you've got to shed people. So Prabir is calling it a correction. I would maybe go as far as say that it is not just a correction, it is pretty much a reconciliation with reality. Reality does not now need you to burn the kind of cash that you have burnt in the past. But taking, let's say, you know, the side of the students in this case. Now, what has also happened over the last 3-4 years is that ever since, in fact, the pandemic hit, there was this entire lost cohort of 2 years. 2 years when campuses were shut, people did not get placements, they did not go to college, and these were lost years for students. Then we saw a little bit of sunshine in 2022, which again seems to be evaporating now simply because of the US funding winter, which primarily just means that there is inflation, rate hike, money has been parked in US Treasury bonds, and that money is not flowing into the Indian startup ecosystem as it used to. So for the students who have taken high education loans, who have joined institutions and picked up courses which were thought to be high paying, now find themselves in the lurch. So what is going to happen to them is that a year down the line, when this funding winter starts to thaw and the situation becomes a little easier, I've been told that some $18 billion worth of startup investments are waiting to come into India. And they will come perhaps now into companies which are making unit economic sense. They are making some sort of a runway towards profitability is visible. Now what happens is, by the time those taps open and this 18 billion or anything in between comes into the startup ecosystem, by then there is a new cohort of graduates who have possibly taken the same courses or slightly more advanced edited courses which are more relevant for the times today. And this generation which has lost out will continue to be losing out in the larger run in their careers, and that will become something very difficult for this cohort between, let's say, 2020 to 2023, 2024 to reconcile their careers with. When people who are junior to them, students who have joined the same institutions, taken the same courses by virtue of being younger, will get picked up next year or the year after that and will end up commanding better salaries, better positions than these poor folks who will end up getting absorbed, maybe not in their dream companies, not in their dream roles, and will continue to struggle for a much longer period. So I think, Prabir, that reconciliation, I believe, is going to be a challenge for this cohort. And how do you then advise these students or help them gear up to deal with this reality?
No, very insightful, Karthik. My only additional comment or a little different perspective is, it's taking a very narrow and short-term view of careers, right? 2 years here and there. I mean, that's not going to decide who is really going to have a successful career. Yeah, the launch pad is a little different. The launch pad is a little nuanced. And but I wanted to share a perspective that, how the student psyche is also impacting. Forget the demand side of it, even from the student side of it. See, there have been too many sordid stories of layoffs, and I would like to believe non-empathetic severance by many startups and maybe by many big tech companies. People are also being very wary about wanting to pitch themselves for opportunities in this space. So a bit of wait and watch is not a bad thing, because this is also about an ecosystem evolving from the demand and the supply side. So yeah.
Okay. Prabir, you briefly touched upon certain sectors and certain startups that will continue to do well, perhaps non-tech sectors, as my colleague Karthik was referring to, sectors that do not have tech as a suffix to them. Which are these sectors that you would be advising students who are perhaps enrolling into college now, looking to join the workforce in next 3 to 4 years? Which are these sectors that you are hoping that students will pick on, and what are the startups, what kind of startups do you think are still hiring where students should perhaps focus on?
So for me, the opportunities are going to incorporate many sectors that for example, you hear a lot of buzz about semiconductors. You hear a lot of buzz about infrastructure, right? Now, infrastructure may not have been the most glamorous sector, but the opportunities are huge. And I personally
Sorry, Prabir, you can go on.
So I believe the opportunities in infrastructure upgrade is huge. I mean, look at the kind of investments that are coming in. I personally believe the health tech and the plain healthcare space, including pharmaceuticals, that will continue to be very exciting. I think you wait for elections, and after, once there's a little bit more of clarity on the policy dispensation, I think that's a sector which is going to be definitely booming. And personally, I believe that the FMCG space will continue to be on the back of more dispersed and deeper disposable incomes, is going to see a lot of action. Even some of the so-called startups, and I was speaking to some of them recently, who are now in tier 3, tier 4 towns and cities, they are looking for people. But it's a very different nuance than the typical television conversation, business schools, IITs, IIMs. Finally, let's look at it. That's a very small percentage of people that we are really talking about, but all of us are more familiar with them, so we talk about that. But real hardcore feet on the street requirements of a range of these opportunities, are huge. I'll leave you with one thought, and it's a more strategic and directional view that I have. In India, we unfortunately have too much of a premium on higher education. Everyone wants to be in an MBA or have a postgraduate degree. If we actually, as a society, as a government, as a community, we start looking more at vocationalizing, I think the opportunities of employment, more like the German model, I think there's a huge opportunity, because with this 3 trillion to 5 trillion and a $10 trillion aspiration, will need a lot of rewiring in the way we define skills. And I think we will have to go down the education value chain, because you don't necessarily only need so-called super qualified MTechs and PhDs and MBAs, because that's an artificial crisis. And everyone believes that now they've got so qualified, they can't do any other job. So I think this is something that as a society, as government, as industry, we will need to crack and look at vocationalizing and go down the education value chain. Otherwise, I think this issue of just playing ping pong depending on cyclicality and seasonality is not going to be a strategic way of looking at the problem.
Okay, a very, very interesting point of view. You don't need a PhD, you don't need to be in IIM, you don't need to be in IIT in order to get a job. Perhaps we need more feet on the ground. Before I let you go, I think an important question perhaps for those people or people who'd be watching us wanting to know, fresh graduates, people like us, even seasoned professional like Karthik.
Not graduates anymore, Shweta. It's been a while.
Seasoned professional like Karthik would want to know how challenging has the job market become in view of AI. We keep talking about AI, and perhaps we'll talk about it again tomorrow. But what skills do we need to imbibe right now as an HR professional? What skills do you look at when hiring people as far as their AI skills are concerned?
So, I won't talk on the tech side, but as AI, I think there will be a disruption of many functions, many businesses. There is no doubt about it. The speed and pace of that deployment could vary a little, but I think that it was going to make a lot of routine, mundane, transactional jobs possibly disappear is a scare I won't deny. It is true. And one is already hearing of stories where many of these things will go away. But what will be more important, and I think for students to start thinking about, and particularly in our context, is about creative thinking. The ability to think different, the ability to innovate, the ability to deal with ambiguity, the ability to kind of try to reimagine, the ability to collaborate, the ability to be more empathetic. Some of these skills are going to become far more important, because as technology enables a lot of other doing, how you do will become very critical, and what you visualize will become very important. So the power of that is what one will at least be looking for, and it is not the prerogative of a qualification or a degree. It is about the person, and we just have to look for these people who are those bright sparks, the bright diamonds, who are able to kind of get to work with a set of people and get it done. I think that's really where the nuance of new definition of talent is going.
Right. Prabir, I think a lot of students would be watching you today and have learned, I'm sure, a great deal. We have learned a great deal from you. Thanks very much for joining with your inputs. We will come back to you, hopefully call you back again on a story around AI. That's the hot topic, and that is something we continue to discuss every day. Thank you for taking time out this afternoon. We're going to move on now. It's 31st of July, the last date to file your income tax returns. For those who haven't already, clock is ticking out there. There is no extension in sight just as yet. In fact, experts believe there may not be an extension this time around. So far, 6.1 crore people have filed ITR. So far, there is frenzy around filing ITRs. In fact, 3 lakh people are filing ITR every hour. Wow. That is what Income Tax Department is saying at the moment. Let's quickly get in our guest, who's also a CA, Dr. Abhishek Murali, who is the president of All India Taxpayers Association, joining us this afternoon. Sir, thanks very much for joining in. I think, my very first question to you at this point would be, people who have so far, are in a frenzy, haven't filed their ITR, are not sure if they can do it today. What happens if they miss the deadline?
So I think the most critical thing is, if we're looking at it from an outflow point of view, there's going to be a 5,000 rupee penalty that will be levied, or rather a fee, they call it, if you have a turnover or gross total income of more than 5 lakhs. Otherwise, it's just 1,000 rupees. And that's not the big one. The big one is people who have losses. Maybe you're trading in the share market and you have large losses. Maybe you've been selling an immovable property and you suffered loss. So when you don't file your return of income on the due date, which is 31st of July, provided it doesn't get extended, then you lose the benefit of the losses. So you cannot adjust it in the future years. You cannot carry it forward when you have gains to adjust the losses against. So that's the biggest concern I would say for people who don't file it. Of course, there are other proceedings, whether deliberately you have not done it, whether they should take any other action. Those are all there. Those are all can be fought. But the most obvious thing, which is a straightforward thing, nobody can fight, nobody can help you, is the loss of your losses for carry forward.
All right, and since we continue to talk about, ITRs, a lot of people have written to us, Abhishek. One of the questions that we've received on a previous video is that, is it required to show EPF withdrawal amount in ITR? If yes, which category and which section?
So you have to show it in your income from other sources, and it's not the full withdrawal. There is a calculation that has to be done. So it depends on what is the percentage that you're withdrawing, whether you're doing in the course of your employment, etc. All of this has to be evaluated, and only then you'll have to, offer the relevant portion to tax.
All right. And other question that we've received is, what is the minimum income to file ITR? How much should I be earning in order to file an ITR?
And this is a very practical question, because traditionally speaking, the return filing has always been income based. So you need to, if you are under the age of 60, if you have a minimum income before all your investments, LIC, PPF, PF, Mediclaim, all this, before you take all the deductions for this, if your income crosses 2.5 lakhs, then you have to mandatorily file a return of income. Now, this has traditionally been the rule for many years now, but over the last couple of years, there have been a few introductions, which is, if I'm having foreign travel of rupees 2 lakhs or more, I'm paying an electricity bill of rupees 1 lakh or more in the year. Then also I have to file a return. Even if I have absolutely no income, I can have zero income, I'm a retiree. I don't get any income at all. I don't have any pension also. But still, if you've traveled abroad, when you spend 2 lakhs or more, or you've paid an electricity bill of 1 lakh or more, you have to file your return of income. So I would say now the advisable thing is, if you're not sure whether you should file a return of income, it's safer for you to file the return of income.
Okay, Abhishek, I have a question too for you. Hi, Karthik here. So, some tweets suggest that the income tax department is actually using very statistically rich regression analysis this time around to go after tax evaders or those who have not really disclosed their correct income tax returns. So, you think at such a large population level, it's easy for the income tax department to do analysis like this and go after people? And if so, what advice do you want to give to citizens who haven't yet filed or have incorrectly filed their tax returns?
Well, the last speaker was speaking about AI, and I think it's very, very relevant that, you ask this question, because with data mining, data analytics, and, with artificial intelligence today, going after people who are not disclosing is very easy. Back in the day, and actually back in the day, I'm even talking about 6 or 7 years ago, where the income tax had to complete your assessment based on what you are giving them. So if you don't disclose it, it's very hard for them to find out unless they get the information from other sources. But today, everything from even your savings bank interest, whether you have capital gains or not, have you sold a property, all this information is available with the income tax, and they are cross-checking whether you have filed properly, whether you offered it properly, and they're giving you the opportunity. They have an AIS, an annual information statement, and a taxpayer information summary, which is publicly available information. Every taxpayer can go and see what is relevant information is that the income tax has about him or her. So if they go and see this, they can at least offer up to that much. So definitely, It's going to be much easier for the department. Gone are the days where they pick on a random basis, etc. The system is going to calculate. There's going to be AI which is going to mine the information and definitely pull out people who have been evading.
So tax evaders need to be aware. Just one final question,
you can't evade taxes if you're going out abroad. I think this is an important
Correct. You can't
statement.
evade taxes, whether if you're going abroad, or even the fact that there are AI bots and there is enough data crunching happening to go after you if you've lied, not just evaded, but even if you've lied.
Right.
Abhishek, one final question. So at about noon today, Income Tax Department had tweeted saying that 6.13 crore citizens have filed taxes and about 3 lakh citizens filing taxes every hour. So till midnight, add another 12 hours into 636 lakh more Indians are expected to file taxes at the same rate, taking the number up to maybe about 6.5 CR Indians. That's a solid jump from the 5.8 CR citizens who filed taxes last year. Do you think the deadline will be extended?
Look, there are valid reasons why the deadline should be extended. The various things, natural disasters, disturbances which are happening across the country. There is enough reasons for it to be extended. But I understand, why the government are not doing it. They've done the calculation from their end as well. But I would like to see the date extended, mostly because I would say the Form 16s are not issued before June 15th. So realistically speaking, people have had only 40 days to file the returns. So it would be good if it is extended. But of course, now there's a penalty, there's a fee which the government gets to collect if people don't file on time. So there's an incentive not to do it as well. So I hope that it happens, but we should wait and see.
All right, Abhishek, thanks very much for joining us. If it gets extended, if the deadline gets extended, we're coming back to you tomorrow again. Thanks very much for taking time out this afternoon. We're going to move on now. China's factory activity is contracting. Now, data from fourth straight month shows a contraction in July, even as the Chinese government released new measures aiming to boost the world's second largest economy. The official Manufacturing Purchasing Managers Index came in at 49.3, below the 50-point mark that separates expansion and contraction. Now, this is as per data from National Bureau of Statistics. China's post-COVID recovery is proving to be a damn squib, and the country is struggling to improve growth. A dismal economic scenario is driving China, largely due to slow consumption, and it's a cause of concern for the country. Country, of course, taking all due measures that it can, has released a 10-pronged agenda this afternoon in order to spur up the economy. Whether those important measures are going to result in boosting the economy or not, going to up consumption or not, we will bring you that story. But with that, it's a wrap on this edition here on Newsline. Thanks very much for watching.
ChatGPT. It can generate codes and human-like responses through text, write stories, and do a lot more.
I work in a newsroom with anchors, researchers and scriptwriters, graphic artists, producers, video editors, camera crew. But does a newsroom really need them today?
All of us have to think about unique and distinctive value addition that cannot be automated or repeated or replaced by a machine.
ChatGPT may kill many companies. A human has to be in the loop with an ability to control this.
Dark Side of the Boom. Streaming now.
China won't let us rest easy on our borders, but they will keep flooding our markets. What does Xi Jinping really want?
I think he wants the Indian market, no doubt about it. It's really a matter of showing their dominance.
India's great Chinese conundrum.
Nobody can contain it. Not the United States, not China, not anybody else.
Frenemies. Streaming now.
Long years ago, we made a tryst with destiny.
If Nehruji had treated Jammu and Kashmir like any other princely states of that time, then Kashmir would have been like any other state, peacefully, fully united.
After 70 years, you have nothing to do except to criticize Jawaharlal Nehru.
There was a dying need on the part of Mr. Nehru to emerge as an international statesman. And in the process, national interest was completely staked and compromised.
By debunking my facts and figures, they are actually disowning Nehruji.
Over 75 years after Jammu and Kashmir's legal accession to India, the Nehru debate is back. The Congress has accused Jammu and Kashmir's Maharaja Hari Singh of vacillating over Kashmir's accession to India. Union Law Minister Kiran Rijiju has called this a historic lie.
Nehruji in 1952 Parliament speech clearly mentioned that Maharaja had approached to him before 15 August 1947, but Nehruji did not want Kashmir to be part of Indian Union at that time.
Raja Hari Singh, he didn't want to join India, neither Pakistan nor India. He wanted absolutely an independent state.
Nehruji has his own special liking for Sheikh Abdullah Sahab, and Nehruji had taken a different route and applied different yardstick for the state of Jammu and Kashmir.
It was Sheikh Abdullah who said it is not possible because on one side it is Russia and China, on other side it is Pakistan and Afghanistan. We can't exist if there is independent Kashmir. But Hari Singh wanted it.
On the one hand, you have the external aggressor openly waving the green flag. And on the other hand, you have internal aggressors knowing fully well that they have a bargaining chip with the Indian state to say, listen to us or we go that way. And that is the Abdullah Kothari. Maharaja Hari Singh was very aware of this. He had warned that the moment you choose